Hello everybody and welcome to our next video on auditing. In this video we're going to be covering the topic of responsibilities, specifically the manager and auditor responsibilities. So this is one thing that's important to very clearly explain to any user of the financial statements what the role of the management was and what the role of the auditors is. So investors and other users rely on this information that appears to be coming from management. Management of the company, in other words, the client that you're auditing, that company prepares the financial statements. Now, whether they have somebody outside of the company prepare them for them, or whether they have an internal auditing staff or accounting staff that puts them together, that doesn't really matter. Ultimately, it's management that signs those statements and releases them. So, investors, on the other hand, though, they realized that there was a CPA firm involved in reviewing the financial statements. So they know both parties had some role in those financial statements, but there may be some confusion regarding what role the auditors perform versus what management performs. So it's very clear to explain this, and we'll see an example of an audit letter that very clearly shows this as well. It's not something you want to leave implied. It's not something you assume everybody knows. It needs to be very clearly stated. Management's responsibility, as I mentioned earlier, is to prepare the financial statements. Now, again, whoever they have in-house do it, doesn't matter. They probably have some sort of accounting staff. If they don't, they may hire a CPA firm or an accounting firm to compile those statements. Now, it's an external accounting firm, but you have to be careful here. A lot of times you call them a CPA firm and you think of auditing. In this case, they are compiling those statements. They're using the data that management has given them, and they're putting it together in the proper format using just basic math. They're not doing any sort of detailed review on it. So compilation is no different than the level of work a regular non-audit accountant would do. So this is a situation where you may have a CPA firm, but they're not acting as CPAs, CPA being an auditor. Instead, they're acting as base level accountants. And that's fine. That's perfectly fine, but it's very important to understand that it doesn't really matter who puts together those statements. There's got to be a separate external auditor auditing them down the road, and it can't be the same group that put them together to begin with. So you have the CPA potentially being involved. It's also management's responsibility to establish a sufficient system of internal controls, because the idea here is they need to determine how reliable that information is going to be, and they need to try to make sure it's as reliable as possible. So we have an internal audit area within a company that's usually involved with this. Now, management needs to be involved with that as well. They make decisions, but internal audit will help support them, help provide information they need. They'll help do internal testing. That's a separate topic altogether when you get into internal controls and internal audit. But the point here is it's management's overall responsibility to ensure that system of internal controls is in place and is working properly. So these are the two responsibilities management has. Now we're moving on to the auditor's responsibility. So the auditor's responsibility is simply to express an opinion about those financial statements. They're not putting them together, because if they did put them together, they would be auditing and reviewing their own work. So they're not putting them together. They're reviewing them to express an opinion about whether they believe the statements have been fairly presented in accordance with GAAP. More specifically, they're trying to provide assurance as to whether or not there are any material misstatements of the GAAP compliance requirements. So first of all, this is not a guarantee. It's an opinion providing reasonable assurance. It's not a guarantee that everything's perfect. In fact, there's no assurance that there were no immaterial misstatements. The sole scope that they're looking for is anything materially misstated. In other words, something that is large enough that it would have impacted somebody's decision. So again, it's not a guarantee. And it is absolutely not a statement on whether or not the company is a good investment. The audit report has zero to do with that. You might have a situation where a company is in poor position, but they're being honest, they're reporting everything properly. Their financial statements just say, hey, we are having a very bad year, but here's the honest truth about it. It's a bad year. That audit report may be a perfect audit report. It's known as an unqualified audit report, which I know the name sounds weird, but that's actually the best audit report you can get. So there may be an unqualified audit report given for a company that is in a very, very, very bad year. That's fine. The whole point here is, are they being honest? Is everything clear? So the investors cannot look at the audit report to determine whether it's a good investment or not. The auditors are not going to make any sort of opinion like that. Now, the next topic would be internal controls. So the question here is, does the auditor have any responsibility on internal controls? Pre about 2001, before the Public Company Accounting Oversight Board came into play, there were no requirements at that point in time. In fact, a lot of times you'd see the auditors, I even remember taking an auditing class where it was pretty clearly stated that auditors do not have to get involved with internal controls. They can decide to do their own detailed work and they don't have to touch the internal controls. Now, PCAOB requires the integration of an internal control audit along with the financial statement audit, which makes sense because you want to make sure both are working properly. The internal control system has to be working properly to help ensure that the accounting information you're given is going to be properly reported as well. And the specific requirement there is under ASC 2201, if anybody's interested in reading into that further. Now, the communication of these responsibilities, as I said, it has to be very clearly communicated in the audit report. We cannot leave it as an assumption. Any investor, any user of this financial statement should be very well aware what management's responsibility is and what the auditor's responsibility is. You'll see a statement very similar to this, probably exactly like it. It'll say these financial statements are the responsibility of the company's management. Our responsibility is to express an opinion on the company's financial statements based on our audits. That two-sentence phrase, or that little short paragraph, is virtually word for word in any audit report you find. Now, I have an example here. I believe this was Walmart. We can open up and take a look at that. So this is a Walmart example. If you go to any other company, you're going to see the same thing. First of all, to find it, we have to find the actual audit report itself. Now, depending on the company, and what's all involved, if it's consolidated or not, it might be in different places. But one quick thing to see to find that, it's very easy, actually. You'll notice, first of all, we have the financial statements and supplementary data. That's actually what management is, or what the auditor is reviewing. So if we were to click there, first thing you'll find is the report of the independent registered public accounting firm. This is the audit report. However, another one, I'm just going to scroll back to the top. If you weren't sure about that, maybe the verbiage is a little bit different. If you do a Control F to find text, just type in the word opinion. Now, you might find a few examples of it. And in fact, in this case, opinion brought you straight to the audit report. But that is a word that guaranteed has to be in the audit report. So that's another way to find quickly an audit report, is just search for the keyword opinion. But in this case, I just wanted to point out that we have this audit report. We're going to have another lecture that goes through a lot of these in much more detail, a lot of the pieces. But notice, here's the piece that I talked about earlier. I'll zoom in. So again, this is the opinion. These financial statements are the responsibility of the company's management. Our responsibility is to express an opinion based on our audits. So all of that, it goes into much more detail, scope, and all of this. You can see the audit firm was Ernst & Young. Now again, this is all public information that you can find out on the sec.gov website. We're going to see that in other lectures as well. But for now, I just wanted to point out that responsibility is pointed out very clearly in the audit report letter. We'll come back to our video now. And that takes us to the end of this discussion on responsibilities. That's really all I wanted to cover for this one. But hopefully this has helped to clarify that very important piece of understanding. And I look forward to talking to you in our later videos. Thanks for your time.